C. Leveraged buyouts. If successful corporate business acquisition is so hard, how does one explain the widespread recent success of most of the leveraged buyout LBO operators who have purchased corporations? A huge part of the answer comes from income tax effects and other simple effects. When, in a typical LBO, the typical mostly equity corporate capitalization was replaced by 90% debt plus a new 10% of capitalization common stock position. 1. The combined market value of all the new common stock plus all the new debt became much higher than the previous market value of all the older common stock because the existing stream of pre-tax earnings was no longer shared with corporate income tax collectors who, in many cases, had previously received more cash each year than shareholders. And 2. Even after the value-enhancing effect of the corporate tax reduction was shared with former shareholders by paying them extra high prices to leave, a retained residue of value-enhancing tax effect made the new common stock, which now became much like a speculative warrant with good terms, worth considerably more than cost as the ink dried on acquisition papers. And 3. The new owners then resorted to strategies, difficult neither to conceive nor implement, including the following. A. They eliminated many of the easily removable costs, largely personnel costs, and subpar segments, which in some mix 1. Bedevil successful corporations, including ours, with sloth and folly, and 2. Create their humane grace and, through present sacrifice, good long-term prospects justifying sacrifice endured. And B. They sold off a few operations at super high prices, sometimes exercising the easiest microeconomic insight by selling to a direct competitor and sometimes selling to a surprisingly easy-to-find, non-competitive corporate buyer not owned by its managers, willing to pay almost as high a price as a competitor would. And 4. The new owners then profited, in due course, not only from the tax effect and other simple reshuffling activities described above, but also from the wonderful upside effects of extreme financial leverage during a long business boom accompanied by a rising stock market. Whether the country wants a large number or even any of its large corporations to have extremely leveraged capitalizations, except through occasional adversity, presents interesting social questions. Is one social function of corporations to be financially strong so they act as shock absorbers, protecting dependent employees, suppliers, and customers from part of the volatility implicit in capitalism? Was Ben Franklin right when he included the following folk wisdom in Poor Richard's Almanac? It is hard for an empty sack to stand upright. Is a weak corporation, borrowed to the hilt, the social equivalent of a bridge with an inadequate reserve of structural strength? Granting that leveraged buyouts have some favorable effects, as well as unfavorable effects, on long-term efficiency, how many thousands of able people do we wish to attract into promotional corporate recapitalization activities which 1. Reduce corporate income taxes, 2. Often tests the limit of antitrust laws, and 3. Focuses business attention on short-term cash generation to pay down oppressive levels of debt? Finally, as Columbia Law School professor Lou Lowenstein puts it, more or less, do we really want entire corporate businesses as important social institutions, continuously traded like pork belly in contracts? However the social questions are answered, 3 aspects of the present situation is clear. First, the corporate tax effect is so large in LBO transactions that easy success in such transactions does not imply that success is easy in ordinary corporate acquisitions. Second, the hordes of leveraged buyout operators now with us raise the general level of acquisition prices to the detriment of other would-be acquirers, including Wesco, which are not willing to maximize tax benefits through maximized borrowing. And third, the LBO operator will not go away so long as present permissive laws last. The operators have a real advantage under such laws, not just a fig leaf aiding promotion. Even though failure and disgrace will reduce their number, and prices paid in leveraged buyout transactions will fall, the capitalized value of reducing the corporate income tax will remain. Therefore, plenty of rationale incentive will remain for transactions. The LBO genie will encounter reverses, but he is not going back in the bottle unless ordered to do so by new laws. It should also be noted that the LBO operators' incentives to bid high do not end with real advantages derived from tax law and willingness to reshuffle businesses with much speed and a few scruples. Additional incentives for high bids come from typical structures in which general partners of LBO partnerships risk little of their own money, often less than none after fees are taken into account, yet share significantly in gains. Such arrangements are similar to the system of the racetrack tout. And who has ever seen a tout who didn't want his backer to make a lot of bets? To Wesco, as a non-LBO operator, the good corporate acquisition game was always tough, and that game in each recent year has become more like fishing for muskies at Leech Lake in Minnesota, where the writer's earliest business partner, Ed Hoskins, had the following conversation with his Indian guide. Are any muskies caught in this lake? More muskies are caught in this lake than in any other lake in Minnesota. This lake is famous for muskies. How long have you been fishing here? 19 years. And how many muskies have you caught? None. When a management has our point of view, infrequency of business acquisition may safely be predicted. Whether this happens, as we like to believe, because the game is hard for almost everyone, or merely because the game is hard for us, the result for Wesco shareholders is the same. Less worthwhile activity than we all would like. But there may be one consolation. A series of big, incorrectable acquisition troubles with no meaningful salvage is seldom caused by people who think the acquisition game is like fishing for muskies at Leech Lake.